Okay, Brooker, it's great to have you on the podcast. Can you just tell me a little bit about your background? Because you've worked at some amazing hedge funds, Cochu, Citadel, Tiger. I assume that's played a big role in kind of shaping Covey.
Yeah, hi Eddie. It's great to be here. I'm Brooker, the founder of Covey. And you're right, I've spent a lot of time before this at different hedge funds. I was at Co2, which was one of the larger tech hedge funds in the world, run by this man named Philippe Lafont, who's incredibly charismatic, this amazing leader who would light up a room anytime he walked in, but also had this incredible skill of being this like bullshit detector who could spot an issue with a model if you present it to him, or spot an issue with the management team if they were there. And then after Co2, I went to a seed of Tiger Management, which is run by Julian Robertson, one of the all-time great hedge fund investors. And he's seeded companies like Lone Pine and Viking and Tiger Global. It was incredible to work with him. He's just amazing at spotting talent. And so he loved to trade ideas. He just loved to talk stories about ideas and trade those amongst friends. And then after that, I went over to Citadel, which is one of the largest hedge funds in the world. That was a totally different experience. It was all about the proprietary software they use. I was an analyst there, and we were just putting in ideas into this software and measuring our conviction and putting in the earnings estimate. And it was almost like you were in this simulation, and everything you did was in this software, and it allowed you to run hundreds of millions of dollars through it. It was a really cool job there. And then after Citadel, I left and I founded Covey.
Brilliant. No, that's awesome. And I read that you were also at Goldman before that, focusing on banks, which is extremely topical, obviously, this year. What kind of things were you specializing at the other hedge funds?
At the other hedge fund, at Goldman, yeah, I started with banks and then moved into fintech, which was this up and coming sector, and from 2008 to 2012 when I was there. And so from fintech, I got more into internet and more into technology. And so at all the different hedge funds, I covered tech stocks. So I was trying to come up with a view long, betting for, or short, betting against different technology companies, a lot of internet companies like Google, Facebook, Amazon, and trying to come up with a unique view based on a lot of data that we would compile from management teams or credit card estimates or app estimates, putting that all together and coming up with a view.
From all your time at all these different firms, what were some of the kind of core characteristics of like what made an incredible trader? Because from listening to some of your interviews before, it kind of translates over to Covey as well. The best traders are sticky; they stay at the top of the leaderboard. So, what are some of the common characteristics of what makes a great trader?
It's such a good question. It's really hard to look back and say there was this one thing, like all great traders went to Ivy League schools, and that was definitely not the case. They came from all different backgrounds. There's really nothing you can say that is consistent amongst all of them. The only thing that was the same was their track record, is they had the performance to back it up. And other than that, they loved investing and they had the track record to back it up. But I wish there was a way to spot talent, but it's all you can use is their track record.
Yeah, actually, that track record is, data doesn't lie, the numbers are there. And so, in a nutshell, what is Covey trying to do if you were to kind of summarize it in a few
Yeah.
lines?
So we want the best people to be managing our money. So we created the first of its kind global community to find and reward the best investment analysts so that anyone can download an app and co-trade with the best. And it makes it easy for you to access proven performers and easy for you to feel confident that you're always investing in the best talent.
And what types of people are actually in this community? Is it kind of a combo of those that have been in the industry? Is it just normal people that are just incredible day traders and swing traders? What kind of people make up that community?
Yeah, so we built this community. We call it the Covey Training Club. And that is this global competition to find and reward the best. And the best we label as the top 1% from that community over the last 12 months. So really like exceptional proven performers. And these legends, some of them have a finance background. Others are like coders who've come up with a more systematic process for finding ideas. A lot of them are also from like want to get into finance or from another industry. A lot of them are students. We have some PhDs in there, really like all different backgrounds, love finance, love investing, and are trying to test their strategies to figure out a way. And some of them have tested them so well and they've proven that they're exceptional. And so we take those proven strategies and label them legends, the top 1%.
That's such a great name. So just to for the audience and the benefit of the audience, can you just unpack what are the mechanics behind co-trading? Like, what is co-trading, and what goes into it from your side, and what could someone expect from kind of joining? And is it kind of like copy trading?
Yeah, so co-trading is essentially investing alongside the best. So we take the top 1% of analysts from this global competition and then take their top 20 ideas. And we create a portfolio for our clients suited to their risk tolerance based on these like 20 ideas. And then the cool thing is let's say you're in there and the legends are long tobacco stocks and you don't want that. You can mute those positions. So co-trading allows you to customize it towards your likings, but still be able to get all the ideas of the best.
Great. And would you kind of think of this as almost like an alternative to just throwing your money into an S&P tracker? How do you think of that as maybe a retail investor that can put their money in lots of different places? Is it kind of a diversifier, or is it just a different way completely of maybe outperforming that, just traditional model of putting your money in an S&P tracker?
Yeah, so our goal is really to beat the S&P. That's what we're doing this whole thing for. And what we found is when we look at the data for retail investors, and we look at a company like Robinhood, which publishes market gains of their clients. So you can see, let's say since the COVID bottoms, you can see the market's up like 60%, the S&P. But you look at retail investors on Robinhood, they're losing money over that same period, which is nuts. And so what we're saying is, listen, it's horrible that we're losing money when the market's going up, but we should also put some people into this class of being able to beat the market. And so that's essentially what we're trying to do, is take the top 1%, get you into their portfolio so you can have a better chance of beating the market.
And for those retail traders, like you said, that's a pretty stark kind of underperformance. What are some of the kind of key reasons? Why do retail traders kind of en masse lose money? What things are they doing that the institutions aren't doing? Because I know our audience will probably be listening to you and saying, "Oh, I need some tips." How do I not make the mistakes that the majority of people are making?
Oh, that's it's a lot to unpack.
Yeah.
I think if you look at the data, where people lose a lot of money is on platforms that offer highly leveraged products. And so if you go on eToro or use options on Robinhood, you definitely increase your chances of losing money. And so options are incredibly dangerous. And then there is just the emotional side of it, is we as retail investors, we're looking at the market not as our full-time job. And it's really hard to constantly keep up. And we'll see some sort of a headline, and we'll see, the Fed is raising rates, and we'll read that and we'll say, oh God, I got to get out of the market. And what you don't have is a view as to, well, what was the market pricing in? Was the market pricing in that they were going to raise rates 50 bips and or 0.5%, and they only raised 0.25%? So maybe that's actually positive news. And so the market could go up from there. And so you're not spending all this time looking at the market. We have day jobs, we're doing other things. And frankly, that may not be the best use of your time. I love the sports analogy and thinking about, well, we all love playing soccer, let's say, but that doesn't necessarily mean we should go out there on the field and compete with the best. It means we should get together, find out who the best is, and let them play for our team. And so I think that's what hopefully will happen to investing is, instead of us all trying to become investment analysts, let's find someone who's incredible at it and let them run our portfolio. And of course, we should all take some bets on our side because we do have some unique advantages. We have some unique insights, and that's amazing, and play those out and just leave it, buy and hold. But for a lot of people, I think, at least for me, I'd love to find the best and let them look at the market constantly and let me focus on the things that I really care about and relax a little bit more.
Yeah, that's a very powerful kind of analogy, I think. I was playing a bit of basketball last night, but unfortunately I'm not Michael Jordan, so it'd be better to let him take some shots instead of me.
Yeah.
So focusing on the data side of that performance, what data are you actually collecting for these traders? Because in my previous life, I was, as we discussed kind of off air, I was also analyzing the performance of some candidates and their trading performance. But it's not all about P&L. Obviously, in real life, in our retail traders, and we look at our portfolios, of course, that P&L is, basically the be all and end all. But there's a lot of other things that kind of come into that actually can maybe contribute to a better long-term performance over time. So what kind of data points are you actually collecting on these traders in terms of, let's say, number of trades, P&L, or is it the P&L which kind of bakes in all of those kind of positive things and that's what you're tracking?
Yeah. So overall, what we're trying to do is to bring this like Moneyball moment to investing. So get all the data possible on all the players, and then figure out who's best from the data, and then elect them to manage our portfolio, put them on our team. And so when you think about it, we try to collect as much data as possible. So what we do is we allow anyone to come to the Covey Training Club, input their ideas, like long Google 10%, long Amazon 10%, long Visa 10%. And from that little bit of data, we're able to generate the P&L of the portfolio, the drawdowns of the portfolio, the Sharpe ratio of the portfolio, the individual performance of each of those ideas, like the hit rate, the slugging. We can understand so many metrics, like infinite amount of metrics from these little bits of data. And what we do as this community of the Covey Training Club is we come up with a way to reward analysts on a short-term basis while thinking about it long-term. And so we look at this thing we created called the alpha algorithm, which is our way of trying to find the best. And so it's not only about total percent return. We take into account 6 different metrics that make up a great analyst that you would feel really good putting your money behind. And those 6 metrics, we rank them on a daily basis. You can see it on our website. Watch the leaderboard. It's totally transparent, totally open. And so they're all competing on these 6 metrics that make up a great analyst. And from there, we take the top 1% over the last 12 months and call them legends.
Yes, it's so interesting. And what is I guess just a kind of off the wall question, what makes these kind of traders stick around? Are they just super competitive and they just want to be there, or do they take a lot of maybe value in like teaching others or like showing others this is the way to do it? What's the kind of intrinsic, value of these people sticking around and contributing?
It's a really good question. Like, what are the incentives for all these people to submit really valuable data of their ideas? And they're on there to credentialize themselves, to enhance their career. As I was saying before, they want to get into maybe a hedge fund or get in to investment banks. So they use this to build up their credentials so they can share their track record with anyone, because that makes the great investor. And they're there a lot of the time to compete. And so what we do is we reward people at the end of every month, and so they're there for those rewards, and that keeps them sticking around.
Yes, really interesting. And yeah, so your tech stack as well, that you've worked on, is really interesting in the sense of, I mean, anyone can just roll up with a trading account and say, oh yeah, look, here's my gains. But you're doing something really interesting on the kind of blockchain kind of side of things, where all of these results can actually be like verified by you. And let's say anyone looking at this data can feel really confident that, this is legit and it's not just pulled from any account. So could you just shed some light on that?
Yeah, we do some cool stuff on our technology for sure. So there's like two sides to us. There's the Covey Legends app, that allows you to co-trade with the best. That's crazy straightforward, just like you would use Robinhood or eToro. You just go through the onboarding flow, super fast, deposit real money. You don't need to know anything about the blockchain. Then on the Covey Training Club, where we find and reward the best, that is pretty amazing the way we've built it up. And we came up with this this community to find the best, and it's, when you think about it, it's really straightforward, but we actually need to dive into it. You have this problem where how do you trust these track records if all we are is about is the track record of our analyst? How do we know for sure that they placed that trade when they said they did, right? People share screenshots to Twitter, or even they share their ideas to Twitter, but you can delete those tweets. If you were to go and show your Fidelity account of your performance of your portfolio and try to get an auditor to look at that, that would cost thousands of dollars. So we couldn't do that. So how do we really cheaply produce reliable track records? We took everyone's trades and we allowed them to post it to the blockchain. And so an immutable ledger, think about it more as a database that has an immutable timestamp of them being long Facebook when they said they were long Facebook. And so it's like an irrefutable track record that's set in different points in time. And so that little string of long Facebook 10%, we post that on the blockchain. So that solves one problem. And then the other problem is, well, we want to incentivize people to keep posting ideas, and we want to reward them. And we have this global community. So how do you reward a global community every single month at a cheap cost? And we looked into doing it with fiat, with like US dollars, and there's the banking system is not ready to pay someone in the Philippines and in France and in Brazil and in Canada and the US all at the same time. It just doesn't work. And so we use the blockchain to distribute rewards. We have people's addresses from their immutable track record, and we just send rewards to their address. We can do that in about 5 minutes, pay out our hundreds of analysts. So another problem solved.
Yeah, but these kind of rewards are actually just paid from the revenues, right? So the actual funds that are in these kind of portfolios are not touched at all, are they?
The rewards are just paid from essentially Covey, and so we pay out those rewards in the form of a token. And so we have a blockchain token called the Covey Token, and we reward people in that. And there's some cool characteristics to that. Definitely, we're getting deep in the blockchain side. I would just go to covey.io, covey.io, and you can find out all the details about this Covey token. It's a really compelling proposition, and has motivated our community into the hundreds to post ideas and compete.
And as you're speaking, and when I was doing my research, the kind of what the concept, I think, is it fair to say that Covey is essentially a decentralized hedge fund? Is that a good way to think about it?
It's a bit. It is a bit like that. As in, if you think about a Citadel, they employ 100, 200 analysts, which is what I was doing before, to go work in New York and Chicago and to input our ideas into a software, and then they build a portfolio from that. What we do is very similar to that, but we have a decentralized pool of talent from all over the world that are not all from these Ivy League schools or all have the same background. They look very, very different. And what we do is we rank them. And so Citadel kind of does that too. If you're an amazing analyst, you start getting more resources allocated to you. And if you keep doing well, you start getting more money allocated to your portfolio. And on the flip side, if you do poorly, they actually take money away from you. And so we've taken that concept, and what we do is we take only the ideas of the top 1% and create the portfolio out of that. And so we're really, really elevating it. And our view is that our top 1% from a much larger community than Citadel should be able to go head to head with them. And I really think they would. They're incredible. And so we're focused. We're going to hopefully beat everyone by scale.
Yeah, that's really, well, yeah, exactly. The more scale you have, obviously it takes time to go through these candidates. If you're a Citadel and you can only, let's say, go to a few schools, whereas you have the whole world to essentially access potentially, and that 1% of a larger number through scale leads to better results of a better 1%. So I guess a big picture question: what does the future of retail trading look like? Is this model, is it community based? Will we see you thrive and others, in this kind of community based model where people share ideas? Is that what retail trading looks like in the next kind of 5 to 10 years?
It's a great question. There's so many changes happening, and you're seeing a lot of these from the platforms you're on. I think there's two really big trends I'm noticing. One is this shift towards active management. And so for so long, people have been going into passive ETFs, things like the S&P 500 index. And the share of active has kept going down. People have started to manage their own money. And that number went all the way down to like 5% of all ETFs are actively managed. So it's just been getting killed. And people, as I was saying before, the retail investor is not doing that great managing the money themselves. And I think they're just like tired of doing it. It takes a lot of time. And so I think people are shifting more towards active management. And so that trend is reversing a little bit. And so you're seeing it in the ETF flows to active management being significantly greater than passive, right? So it's only 5 or 6% of the assets, but now the new money coming in of that, 30% of it is going towards active. So people are now, active is growing much faster. And I think you're also seeing that as you look at social networks, you're seeing way more people share ideas. You're seeing companies like us come about that introduce this idea of copy trading and saying, hey, maybe there is someone else that is going to have more time on their hands to be able to go deeper into the market and give me some great ideas. And so that's the second one is this mix of, okay, maybe the best talent's not all on Wall Street and they didn't all go to these Ivy League schools. Maybe there's this amazing talent somewhere else. And so how do we find that? And we've put together our proposition. There's a lot of other really cool ways to do it. You can also just look at people on Twitter and see how their ideas have performed and do it that way yourself. But I think that's the second shift. And I'm not so sure how that plays out. We're taking our bet. And we obviously believe strongly in that.
Yeah, obviously. So over the last few years, it's been a somewhat of a volatile time in the markets, just generally with inflation, higher interest rates, and the big tech reset, which of course retail traders love tech stocks. And then this year's been almost a complete reverse of that with artificial intelligence, the prospect of lower rates, whether we get them this year or not. So how have what insights can you get from your traders? Are they performing well in all types of environment? Did they do better than Wall Street maybe in 2022 when we had that kind of big reset? How are they performing this year? What insights can you kind of provide us from your community?
It's great to be able to see these legends in this app. You can see we're totally transparent. You can see their ideas. You can put them in your portfolio if you want. You can see how they've done. And what the characteristics, I think, of a legend is that in a market where growth works, they do well. In a market where commodities work, they also do well. And so they're able to move across these changing dynamics in a market of raising rates. They also do well. And so I think they're so malleable, and they shift through these different markets and have a different portfolio every single time. And I think also part of that is because we have multiple legends. So you're not investing in one single person. And so we have this diversity of thought that goes across cultures and education levels. And it's something that one single person would be really hard pressed to create a portfolio that has such opposing views. So if you look at the Legends portfolio right now, it's long these growth stocks. So it's long Microsoft, Amazon, Tesla. But at the same time, it's also long recession proof stocks like auto parts retailers. So people are going to fix their car regardless of the economy. So it's also long these stocks. And that's two very opposing views. And then it's also long a lot of leading healthcare stocks, another like very different sector that you have to know a lot about. And so it also has a nice hedge on in case volatility changes. So it has like all these different views that would be so hard for us to craft a beautiful story and narrate to someone why we have all these opposing views. But we're able to do it because we have different people who aren't connected and aren't in this groupthink together creating a portfolio. And that allows it to perform in all these different markets because we have such diverse perspective. And so I love looking at it just for that.
Yeah, and I can imagine that geographically speaking, because you have users from all over the world, instead of just all being in US tech stocks, there's maybe some Asian exposure, there's some African exposure, there's some European exposure in different ways. Do you see that as well? That people, basically investing geographically more in a diverse way?
Yes, definitely. I think around the beginning of the Ukraine war, the Legends portfolio, we really liked the way it performed because our analysts were very quick to look at what was happening and place their bets. And I think that's because we have one of the legends is in Denmark, and perhaps they have just a closer view, closer to the pulse of that. And so we also have legends, of course, in the US, so they can capture this growth phenomenon. So it makes it so much more unique, being able to understand all these different things that are happening in the world, which is so hard for us as a retail investor who has a job to try and figure all this stuff out. It's just like so difficult. So it's really nice to have someone that you can trust that's doing an amazing job of it.
Yeah, absolutely. I mean, wow, this has been really, really insightful. Just to end the episode, what are your kind of big things, big themes that you're looking at in retail trading, in markets, in the way that maybe the gap between retail and institutional trading and investing in information and research is kind of shrinking? What are some of the things that you're really excited about over the kind of short to medium time frame?
I think one thing I'm really excited about is when I joined the hedge fund world, we had access to so much data that the average retail analyst didn't have access to. We would use aggregated credit card data, so seeing what people are actually spending money on, like in real time. And we were looking at app usage data and all these data sets that no one had access to. And so the gap of knowledge was just massive between an institutional investor and a retail investor. And the good news is now that data is so widely distributed across hedge funds that it's kind of leveled out the playing field, and it doesn't really add much value because every hedge fund is using it. And at the same time, we've had this explosion in data products available to the retail analysts. So it allows our legends on Covey to be competitive with hedge fund analysts. And you saw that in Reddit, where people were looking at the short exposure on different names and going long GameStop because they saw the data. and made this trade. And so 10 years ago, that data just was not available to retail analysts. And here, a few years ago, retail analysts are using this data to outsmart the hedge fund analysts. And so you're seeing this leveling off of the data available. And so I think that is really compelling for our Covey training club, and allows anyone who wants to compete to be the best to join and rise to the top and be known as the best and credentialize themselves. But at the same time, it's also amazing for the Covey Legends app, because now we can say, hey, maybe the best people aren't all on Wall Street, and maybe there's another way. And so we can benefit from this explosion of talent outside of Wall Street.
Yeah, I think that's a great way to end it. Not all the talents on Wall Street. There's enough to go around, and there's some great gems all over the world. So yeah, Brooker, thank you so much. It's been a pleasure, and I'll see you soon.
Thank you.